A home appraisal is a process that involves a certified third party appraiser reviewing the home and comparing it to other homes in the area to determine its fair market value. It's typically required by the lender when someone is using a mortgage to purchase a home or refinancing their current mortgage. Because the lender can only lend up to the appraised value of the home, this ensures the lender and the home buyer are paying a fair price for the home. It also helps ensure that the lender won't face a total loss if the homeowner happens to default on the loan. Because of this, a low appraisal could derail a home sale or refinance. If the appraisal comes in lower than the sale price, the home buyer will not be able to borrow enough money to cover the price of the home. They'll either have to pay the difference out of pocket or renegotiate with the seller to drop the price. In a refinance, a low appraisal may mean the homeowner doesn't have enough equity to borrow against. On the other hand, a high appraisal can allow a buyer to borrow the money needed to purchase the home at the agreed upon sale price. It can also increase the amount of equity a homeowner has, which could increase their cash out refinance proceeds or could remove their PMI. In addition to providing an estimate of the property value, the appraisal is used when making an underwriting decision to help the lender evaluate whether or not the collateral is adequate security for the loan. Lenders want to know that they will be able to sell it to satisfy the outstanding debt if the property is acquired through foreclosure due to default from the borrower. Appraisals are completed on the Uniform Residential Appraisal Report and cover the following information in detail: subject property address, neighborhood, sales comparison, site map, improvements, number of rooms, interior, zoning for property and flood, additional amenities, cost approach to value, gross adjustments, and then net adjustments. In a real estate lending transaction, the appraiser's main responsibility is to provide an evaluation of the market value of a particular piece of property for the lender's benefit of making a good credit decision based on, among other things, the proposed collateral. Appraisers only inspect the home for value. They do not inspect the home for defects, nor do they attest to the working condition of the mechanics. Appraisals are completed using 3 different approaches to determine value, which are the sales comparison approach, which is sometimes referred to as the market data approach. There's also the cost approach, and then finally the income approach. Let's take a minute to break down these approaches a little further.